The good news and the bad news in the Connecticut real estate market. Hey, I'm Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's February 17th. There's some good news out there. There's some bad news out there. I want to take you through what's going on and how it's going to affect the Connecticut real estate market and mortgage rates, things of that nature. Before we do that, YouTube algorithm, please like, subscribe, ring the notification bell, throw some comments down below. Do you agree, disagree? Are you seeing something different? I look forward to interacting with you on that. Some key metrics about the Connecticut real estate market. 3,532 active homes on the market. That's single family, multifamily, and condo combined. Got 113 less than we had last week. That's become a pattern. Every week for the last few months, we've seen 100, 200 down. So inventory is dropping rapidly. Got 98 coming soon, so there's not enough to fill the gap. About 50% of the houses that are on the market have been on for greater than 60 days. They've got some kind of an issue. Maybe it's priced too high. Maybe it's there's some repairs that need to be done. If it's a repair thing, then renovation loan, I've got a team in place that can make that happen very easily. You get that HGTV experience and a lot less competition. People aren't really looking to do that. They're looking for that perfect house. 2,450 homes were closed in January. And when you run that against how many houses we have on the market, we got about 1.4 months of supply, extremely low. So what's the good news? Consumer spending's up in January 3%. It's great. Even with the tech layoffs, the January jobs report was very strong, 517,000 jobs added, like 2 times what was expected. And even with the low inventory, home prices over the last few months in Connecticut have been relatively flat. So that's also good news. We're not seeing huge increases. And it's almost spring. The weather was beautiful yesterday. I was out door knocking all morning around one of my listings. Beautiful. Wonderful day. Bad news. Consumer spending rebounded in January by 3%. Now you're looking at me and saying, Dave, you just said that was good news. We'll talk about it in a second. January jobs numbers came in strong. Same thing. CPI, which is the consumer price index, rose 0.5% in January, which is higher than expected. PPI, which is the wholesale version of that, producer price index, rose 0.7% in January, also higher than expected. Among other things, the Fed looks at jobs, consumer spending, and inflation to assess the health of the economy, the 3 things I just talked about. Inflation, basic definition is prices going up, right? The Fed targets 2% inflation. The current reported number is north of 6%. And the Fed has said they're going to do everything they need to do to get back to the 2%. This is all interesting. What does it matter? So increased consumer spending, one of the good news, bad news things, means that demand rises, which means if demand goes up, supply stays the same, prices are going to tend to go up. Strong job market means more people have more money, which means they'll have more money to spend, which means there'll be more demand, which means prices will have a tendency to go up. Those are both inflationary things, which is the exact opposite of what the Fed wants. They want inflation down. These things will be driving inflation up. So what do you think is going to happen on March 15th and 16th when the Fed meets again? So they raise interest rates to drive down demand and to cool off the economy. I think they're going to do that again. I don't think it's going to be a quarter point. I think it's going to be a 0.5 point. And I think there's going to be more following it. Again, great. How does that impact the real estate market? So further rate increases could have the result of mortgage rates going up. Mortgage rates going up means it's more expensive to borrow money, means some people be priced out, demand will come down, which theoretically would mean that if demand drops, housing prices will start to soften and maybe even come down. But there's 2 sides to the supply and demand equation. Interest rates affect demand. They don't affect supply. The problem in Connecticut is we have an extremely low supply. The inventory of houses for sale is the lowest I've ever seen it. And it's much lower than the recently reduced demand because interest rates have gone up. So low supply and demand that's higher than that supply level will result in prices start to go up, which is what I think is going to happen in Connecticut. So unless mortgage rates go up by several percentage points, which we do not want, that would be ugly, I expect to see home prices start to climb again within the next couple of months, and it's going to be driven solely by the fact that supply is so very low. This is good news for homeowners, not so good for buyers. If you're looking to buy, I recommend doing it soon. Go out, get that pre-approval. Let's start looking. Give me a call. My contact information is available throughout this presentation. I had clients back in 2018 who said they didn't want to buy. We're going to wait for prices to come down. It's going to happen. Prices are up 40% since then. And the supply of homes today is much lower than it was in 2018. So it's going to be tight. A couple of quick examples to give you an idea what I'm talking about. Example one, this is a listing that I have, asking $355, 50 showings in one day. We got 5 offers and sold in one day for above asking. I can't disclose what the actual price was because we're still under contract. The second one is a house that I brought clients to. We did not get the deal. This is an email from the listing agent. Over the course of 3 days, 98 showings and over 400 people at open houses a couple hours a day on Saturday and Sunday. They received 40 offers, and they chose one that was significantly higher than all the rest and with terms that couldn't be beaten. That typically means a cash offer, quick close, limited inspections, things like that. This is the way the market is right now. Any house that is nice is going fast with multiple offers. If you're not interested in getting into a multiple offer situation, I just spoke to a client this morning who was saying those exact words, then the best thing you can do is go look for those houses that are been on the market for a while, do some renovations and get the house that you want through some repairs. The primary mortgage market survey creeped up a little bit. We're at 6.32%. This is the second week in a row. This is because of the strong jobs report, the CPI reads, and the spending, or the consumer spending. We're already seeing the mortgage rates start to creep up a little bit. As we get closer and closer to the Fed meeting, we'll see how this plays out. Hopefully you got some value out of that and kind of got a picture of why I'm saying what I'm saying about the Connecticut real estate market. If you do have questions, please give me a call. My contact information, like I said, is on here. We can chat. And if you're looking to buy or sell, love to help you out. Have a great day.